All right, good morning. Trying to get started here. As you can see, the time lapse from my intro video to where we're starting, it's now 8:59, so some time has passed. Trying to get everything set up. So anyway, I wanted to show that this is a live account. It says TraderWays Live. It also says that I have $252.23, and this is brand new installation of MT4. I am going to modify this a bit to set it up the way I like to see it. But the challenge is obviously to trade this $252.23 and grow it. It is now 9 a.m. on January 6, 2020. All right, so I'm going to start by modifying the setup here. I like to have an individual screen. I like to change the setup here on the properties, and I usually do away with a lot of things here. For instance, I do have usually a light screen, gray. Don't use the grid. Bar up, bar down. Bar down is red, bar up is green. Bull candle is green, bear candle is red. Line graph, we can keep that at lime. Volume, take something that pops out. Ask line, that's fine, that's fine. Leave this right now. We'll take a look at this. I definitely don't want the indicator. Delete that. Alright, so I'm trying to make it easy for you guys to see what I'm doing. I'm also going to set up the trading size. Since this is a small account, I most definitely don't want to make my default trade size a lot. That would cause me to have a margin call right off the bat. So I'm going to start at 0.01, which is basically 10 cents per pip. And I'm going to reload this screen. And we're going to save this template as, if we save it as default, then all our charts will take that form. You just have to go in and update it. So you go to a chart, got USD CHF. I'll just pull it over here and do, we can actually just close them. And here, as we pop open a new chart, do a chart window, you see pound USD has this default layout. We'll do dollar Swiss franc, and we have the euro, pound. We'll do dollar yen. All right. Well, so the idea is here to show you how I set it up. So I apologize about it being a little bit slow here in the morning, but we'll get started. So the idea is to show you how you can trade, what you should be looking at. This is how I trade, and so I do naked trading. So I trade on price action, and I usually just use the candles to see where I'm going. One thing here I'm going to add is the volume. Now I don't have a good indicator in here, but for the people that are part of my pro membership, you will get the indicators that I use. and mainly it's a volume indicator, and I'm also writing some indicators to help you screen for possible trade setup. So what they will do is go through the chart and look for areas of setup where you should start paying attention to the chart and get ready to take a trade if you like the setup. You will only get that in the Pro membership, and so I'll make sure to make that available. The volume indicator that I'm using, there will be a link underneath the description, and where you can go and download the volume indicator. Volume and price action go hand in hand, so without both on the screen, there's not a whole lot you can trade on it, but you should definitely see the volume. So right now we're just going to take the default volume indicator here. That's not very useful in that sense that you can't see what's pushing up and pushing down, and whether it's shorts or longs. But we'll start with this one. I'm just going to change the color on that because that is quite terrible color actually. So let's make that blue for now. Okay, let's go to Euro USD. Let's see if we can find a setup. As everyone knows, there is some tension with Iran going on right now, so the market's most likely going to be somewhat volatile, and that's okay. That gives us a lot more opportunity. So what I do is I start putting my support and resistance lines in and identify areas based on that where I want to trade. So I'm going to start putting in some support and resistance, and hopefully you know how to do this. It's quite simple. These are areas, so your resistance is when the price is coming from below going up and hitting resistance or hitting the ceiling. And then you have the support lines are when the price is coming from above going down, hitting the support or the floor. And so we'll try to identify some common areas where the price ranges, and then we use that to find some trades. One of the things you want to do is you want to start out on a high time frame. I'll go out to D1 here, and as we see, price is broken above a previous resistance, which is now becoming support. So if this would be continuing up, where would the next level be? We'll continue setting the marks. And don't worry about getting the line exactly where you need to be. As you get down on time frames, you can finesse the timelines. This is just in general to give an indication of when price could be heading. So I'm gonna on daily, I'm gonna set a couple. So what I do is intratrade and swing trade. So intratrade is trades that I get in and out of during the day, and swing trades are trades that I can sit on for a longer time. And I have trades that I've been sitting on for months for many reasons. One, because I expect big moves, or two, because when I trade on my bigger account, I allow for larger DDs or drawdowns. And DDs are something I will be referring to. It's drawdowns where your balance is could be negative. Your open balance could be negative. So if you have $100, you might have an open balance that is negative. So once that comes down to zero and add in your margin, you will eventually get a margin call, and your account will start closing out the biggest negative positions. And you have too many, your account will go to zero and you're out. My leverage on my account is 200, meaning 1 to 200. So I have a leverage of 200 against my positions here. That gives me ability to swing, do a couple of trades that ordinarily, if I only traded 1-to-1 ratio, which is unknown, or most people don't, you wouldn't be able to take a lot of trades. So 200 is a good volume or leverage, and anything higher than that, you'll find yourself getting into trouble faster because you think you have the ability to take more trades because your leverage is higher, but then as soon as the markets start turning on you, then you get a margin call much faster. So 200 is a pretty good level. All right, moving on. I'm putting some more support and resistance in here. I'm just looking. I'm on daily. I'm going to switch down to 4 hour. I'll zoom out a little bit. One way to do is I'm using candlestick patterns. You could switch out to line chart. Holy cow. It's always good to take a look at this line graph. We'll do black. It'll be easier. As you see these jagged edges, tops and bottoms, those are support and resistance. So you can see here, you have one here, you have here. You can use this function to set your support and resistance. That's fine. As you continue doing this, you get more used to doing it with candlestick, which is really what you want to do. Okay, so I think I feel pretty good about this timeline, so I'm going to switch down to hourly. As I switch down, I get closer and closer to what's going on right now, and I get more finite on my support and resistance, trying to trim those if I have to. Right here we see there's an area of supply, and the price came up here and it's turning, so there are things going on here which should be, we have here. So what I did here is I basically on my mouse I clicked the scrolling wheel, and it gives me this indicator here, the crosshair, quick access to it. What I'm trying to see is if at this level here where I see previous supplies, how that matches up to where the price is right now, and it matches up pretty good. So we're gonna put a support resistance line there. I'm gonna zoom in and gonna get a little closer. All right, so we know at this level here that when the price broke through this resistance and then it became support, it broke through, came back to test it, which is common, and then pushed to the next level. And we kind of knew here by this level here that some hesitation would happen here. We see that being pushed here, and there's a reason for why this push is here as you get closer down to a finer timeline. As you get on a smaller time frame, you will also notice that there's more noise. So you got to be cautious. If you don't know how to scalp, don't try. Again, this account is one account that I'm going to try to double, so I'm not going to scalp too much on this. I may, but right now I'm just trying to find a position that I can get in and out of today. I'm looking for 2 or 3 trades, about 3 to 5% risk, meaning I have $252, and I'm looking for somewhere between 3 and 5% at risk on all open trades. So you figure 10% is $25, so 1% is $250. That times 3 or 5, and there you go. So overall, I'll risk $10, meaning I'll set my stop losses. I can take one trade with one stop loss that's massive, or I can take more trades with smaller stop losses. and have more trades running. The effect is the same, really, but there's a thing with numbers. So the more trades you have, if you have 10 trades open with the same amount of risk, the chances are that if your trading winning ratio is 70%, then 7 of those trades are going to be success and 3 of them are going to go to the side. If you take one large trade, that could be one of those 3 trades that would go against you, so then you've blown that whole thing. So think about that. Hopefully that makes sense. Anyway, we're sitting here. We have we came up here and we can see why. So let me put a line here just to show you. So we came up here, and if you wonder why the price stopped here, let's just take a look here. We have an area here. We have an area right around here, 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 here. So that resistance was expected. Now, we had a pretty good push up, and you could call this a pivot point right here. And the price broke through pretty strong and pushed up, gets up here, and it's starting to weaken. Now what we can see is, because we don't have the volume again, for some reason it disappeared. Show volume. We can see here that the volume is lower here, so the market movers are trying to define and see if there's any supply here, and as they try to drive the price down and test the market to see if there's more supply before they push it up, see the volume going down, and then consistent with the move up, the volume grows, and then we have it falling again, and here it's growing again, and we see on this candle here that the volume is going up. So imagine this candle starting, the previous candle closed here, so they opened here, so price went down and then came up and then just dropped down a little bit. So that means that the bulls are stronger. That means there's a bigger push up, and the volume, as I said, you can see is stronger than the previous candle. There was a down candle, no wick at the bottom, but still the volume was lower. So while it tried to keep pushing it down, there wasn't enough buy-in in shorting, and the bulls took over. And the volume here is again high, but we see some hesitation, and this is consistent with this area here. So right now, I don't feel like I want to take a trade here. I want to wait for a new high. The previous high is here, so I want to wait for a break above that to see where we're going. We can see that we have high, low around the same area. We have a lower high. So we have to wait here and see what's happening. We can obviously go down on a smaller time frame, take a look here, see what's happening. A higher high, higher low, higher high, higher low, higher high, higher low, lower high, lower low, right? Pattern changed. Lower high, lower low. And here we have a double top. And we don't have a lower low. It failed. If this candle sticks, right? So let's start taking a look at these candles. Like we see the volume going up here, and on this candle we have a smaller body, but we have an average volume, so would indicate still a bullish move. We have large body, small wick, but low volume. So there's little buy-in and going shorter. It will happen because people are offloading their inventory and other people are waiting to take it higher. So we're just gonna wait and follow what's happening here. So that's Euro USD. A little bit too long here, but intro. So the setup. So I'm gonna hop over to Pan USD, do the same thing. Start on daily and just put some support and resistance line in here and see if we have a setup that we like. So we'll try to shut up a little bit because this is nothing new. You've already seen me do this. And again, I'm trying to work around where the price is because I want to find out if I can get into a trade now or if I have to wait. So where the price is right now, where could it go? So it go up or down. So I'll try to cover 2 lines below, 2 lines above. That should give me a pretty good setup. Figure out what the price could give. And again, support and resistance lines are you know, you set them initially a bit rough, but then eventually you can finesse them as you get closer on the time frame. Definitely have an area of congestion here. And we can see a lot of wicks in this area between these 2 lines. We can see a lot of wicks, so a lot of volume. And I am going to reject that call. Looking, sometimes I use this crosshair to see if I have an area where prices come up to at least 2 or 3 times. So I feel like I have one area here. We see area, there, 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 and there, most recently. All right, going down on H4. Actually, I feel like I need one more. There is that area there. All right. 4-hour time frame. This is pretty good. We have something sitting here. So you may not agree 100% with my support and resistance lines, and that's quite okay. We all have our ways of trading. This is again how I'm trading, so feel free if you want to set it differently, go for it, knock yourself out. Again, I'm not going to tell you how to trade. I am just showing you how I'm trading, so you're free to do what you want to. We got an area there. The reason for me setting them these lines here may seem excessive, but I also trade a lot on smaller time frames, and this allows me to have a better view as I get closer and closer, and I can get in and out more frequently on trades. I can go for small pips, I can go for large pips, and sometimes it's not about how many pips. I see these guys on Facebook saying I caught 3,000 pips. That's fantastic. What was your trading size? The 3,000 pips at 10 cent, great if you have a small account. That's awesome. 30 pips, with a larger size will usually give you more than the 3,000 pips. So it's not the pip count that matters. It's the size of the trade that you're taking, and that's got to be proportional to your risk that you're taking as well, right? 30 minutes, getting down to 15 minutes, which is usually where I hang around. 15 minutes. I think these support and resistance look pretty good. Again, we have something right around here, which is consistent with what is going on right now. So, take a quick look on 5. Looks pretty good. Back on 15, I'm going to zoom in. So, again, there's a pivot right here. Also, this is a consolidation. This area, let me get a box in here. Why don't I have? Do, 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 do. Oops, I just gotta add a box here so I can draw for you guys. Rectangular, close. All right, so we have a consolidation right here. That's a terrible color, but we're gonna change that. We're gonna make that tenderly green. Let's see what that does. All right, so consolidation here, price comes down, price goes up, price comes down, price goes up, comes down. And so there's a equilibrium right here, and we can see that with Fibonacci. We'll add Fibonacci. Let's see, I'll do this one. Draw from bottom to the top. Change that color as well, make that, why is that red? Feeble levels, yellow, we'll make it black. Alright, so the equilibrium, 50%, that's what price likes right here. So this is where I usually pay attention. So the price is going back and forth, but it keeps coming up here to equilibrium, and that's kind of like a natural support and resistance. You see price here, it just keeps coming up here. So when it breaks over the equilibrium, then we'll pay more attention. And we have a very strong candle here that breaks above this pivot level here, and it's strong, so it's a strong bullish move. And what we can do here is we can use this fib from the bottom to the top on the most recent bottom. So if we put the bottom here to the top, we're now at 38 fib. I like to see the fib coming down a little bit further, down around here, 61. And this would be a revisit of this support, previous resistance, and then usually takes off. Now again, we don't see the volume on this because we didn't make it default. So we'll put that in. We'll fix the color again. Volume, make it blue for now. Alright, so as you can see here, you see this pattern, low volume, and then it's starting to pick up here. So the up move was expected, and then you have a push. As the volume goes up, you get up to here, you see a lot of wicks, and you can just look left, see a lot of hesitation around this area, so it's natural that the price would stop out. and take a break. Now we're sitting here at the average volume again. We take a look at the green candles, have a little bit more volume than the red candles. Take a look at this candle. It's pretty good volume, but a small body, which means a sell-off. So someone's selling off their inventory, and so naturally someone would pick it up. So this is probably a good entry. I'm going to take it. I do expect that it could pull back a little bit further, but that's okay. I'm trading 10 cents, so let's take a trade. Accept the terms because I click from here. All right, so we got one position open, and I like to sort mine like this. And now, so we have 10 cents open, and stock market just opened up. 10 cents open, and what we can do here is we're going to risk, let's say, 5% total. So we know 1% is $2.50. So 2% is obviously $5. So we can risk $5 in stop loss, which basically you can just grab a hold of this and keep dragging and dragging until you hit $5, right around here. It's 49 pips. That would allow for a swing down and then a swing up. So we're 2% into open risk, right? We're sitting on a drawdown here of, well, we sat on a drawdown of 14 cents. We have a push up here. Now, so when you trade, you want to do a 2-to-1 ratio at least, which means if I'm risking $5, then I should be looking for $10, right? That's going to take an immensely long time, especially when we're trading so small sizes here. So we'll set this just because we're going to get on to the next chart. So we'll set this one up here. We know there's a resistance up here, so we set that, and that gives us 2-to-1. That's 106 pips. Whether it makes it up there today or not, we'll see. But I think we'll have some hesitation around this area here, so we can put support resistance line here, and then we can. Now we can't take a smaller size here. This is the smallest, but if you were trading 0.02, which is 20 cents, you could cut that in half here. So this could be your first price target, and you cut your trade size by half. So you go down to 10 cents from here to there, and once you get above this area, which is 26 pips, you can move your stop loss to 0. Now you're not losing anything, and you're good. You see the price is halting here. That's normal because we have a little hesitation here. It's sitting over here. So we got to get over this one here, and preferably over this one. So we'll let that one sit and ride that one. Let's get back to Euro USD and see what's going on here. Not a whole heck of a lot. I still don't see anything that makes me feel comfortable. The price is basically ranging, so we can put a box just to say that we want it to qualify. This is the area we're looking for. Up, down. It's going to go up, and you see here's 50% pretty much. So that's where the price likes to hang around, and so we need to see a breakout above this pivot or below this pivot before we take a trade on that. So leave that one alone. The recording is getting pretty long here, so I'm going to try to speed it up a little bit. I'm going to add the volume in here, and since this is one that we haven't screwed around with, I'm going to go ahead and change this line graph to black and the volume to blue. Okay, save this one, template, pick the default, So now volume will show up all the time. All right, so I'll be quiet here for a second. I'll put some support and resistance line in here, and let's see if we have a trade. Zoom out a little bit more. Oh, price is over here. That is just too fussy, so let's do this. Again, just trying to work around the price where it currently is. Where would it go next if it dropped down? Where would it go next if it went back up? I think we got a pretty good idea here. And the first thing we can observe here is we have a pivot over here, and we have a strong break through that pivot. So this dollar Swiss franc is pretty bearish today. It looks like we had a break through this resistance. We had a large body here. I'm gonna continue doing the support and resistance. I'll come back to this, but we had a small body with an increased volume, which means a sell-off. Unfortunately, you have a high volume and small body. Someone's selling off, which is, to me, is an indication for more bearish move. Otherwise, if this was a bullish sign with a higher volume above the previous candles, then we would have a bigger body as well. So, but we don't. So, I believe we're going to be bearish on this one today. But we'll see. Continue finessing our support and resistance a bit. Yep. Since price is around this area, I just gonna keep zooming in because I want to see if I have any trade about to happen, which I believe I will. I'm pretty covered here. There's one area here. And again, you don't have to set this many support and resistance lines, but it's good to know where the price is going to hesitate and whether you feel uncertain about what the market's doing. You can get out at those areas and maybe find a better setup. We have one here, but on this time frame, it doesn't look like a whole lot. But we'll get down a little closer and we'll see what it looks like. So it's definitely worth thinking about. 5 minutes looks like what? Yeah. We'll put one here where price currently resides because we see this is a popular area. Back out to 15 minutes. Let's zoom in a little bit and see what's going on. So we have one here as well. I'm going to set that. Whether you set it or not, that's entirely up to you. Again, how you trade, it's entirely up to you. This is how I'm trading. So looking for a new high if we're going to go long. Looking for a break below this pivot here for a short. We have a candle working its way up. We have a candle here that's indicating hesitation, larger volume. Here we have a bigger candle. The volume is high on this candle, but the body is small. We have a bullish candle here with high volume, but extremely small body. So again, I believe that's bearish signal. So where is the price going to go? Well, I think most likely it's gonna reverse up. So this is where you get trapped, get the bulls in, and then go shorter again. And that's my feeling. So where can we go? Most likely somewhere around here, I think, which would be consistent with what's happening here, 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 and here. So we're gonna wait, and we're gonna wait and see what happens here. See the right signals. We could potentially go long. Don't think so though, but I think this is a stop out. Basically, you have short traders sitting here. Market movers are trying to create volume. They are trying to create an inventory. So why not take out the shorts by going up and hitting their stop losses? That if they have been running them from here, they're now sitting here, and then they might have adjusted them down to here. So let's hit the stop losses around here and then go short again, creating more volume. Anyway, price going up and volume's going down, so that's a contradiction in itself. So we'll wait and see what happens here. Right now we only have one trade, pound dollar. Sitting here hesitating, wondering what it's going to do. Not particularly concerned right now. Just going to wait, see what's happening. And I'm going to pause for a minute because this video is getting very long. So I'll be back once I see some changes. Alright, so I'm back. We had a breakout here on Euro USD, falling out of this range here, and it's a pretty strong move. What I believe we will see here is a kiss coming back up here and touching this before it continues down. This is on 5 minutes, so we see this pivot here. We have a strong push through, and then we have a solid candle here with higher volume. So definitely believe we will have another further bearish move here, but there will be a push up first, and then we'll see how it acts. Right now, I think the push up will be 11,876. We have a little barrier here that I'm looking for. If it breaks below this one, then I'll probably take a short. Going out to take a look, where could this go, right? So I believe with this push outside here, with a new low, when we see this candle, it's a very strong candle. We definitely could have a push down to here, which is 20 pips, and down to here, which is another 28 pips. So that could work out as a good trade. We're sitting right here right now. We're still inside of this supply zone right here, and just observing what's happening here. So we'll see if we can get in our other trade, the pound dollar, up and down, up and down. So we have a retest of this bottom here. So we now officially have a support line here. So we'll see what happens. Still okay. As you remember, I said I'm okay even if it comes down to this area, 61.80. When we look at the volume here on the bearish candles, it's not strong volume. So we're waiting. So now we have a double bottom or triple bottom, the third time we touched. So you can put here, this is 5 minutes again, so you can put a support line here to know that this is again an area. We already have one here, so we kind of know that this is going on. I apologize. So we'll see what happens here. I'm going to pause the video again. If I see something here, we see the Euro USD coming back up. If I see a kiss, meaning it comes back up, touches here, or this line here at 11,910, I will take another short and take it down 16 pips. Once it hits down to 16 pips, I'll expect it to drop another 20 from there. So overall 30 some pips, 36 pips potentially, at 10 cents. That's a little bit more than 1% return there. That's what you get a monthly return on your bank. So ponder on that, and I'll be back. All right, I'm back. I've been watching Euro USD for a little while here, and it's been consolidating here, and it's starting to break out of this little area here. So one thing that I was thinking that I should address as well is that you see this is Euro USD and then pound USD. So if I'm long on pound USD, that means I'm short. I'm short on the dollar and I'm long on the pound. So Euro USD and pound USD moves pretty much the same. Sometimes what happens on the pound USD is an indication where Euro USD is about to head. So the consensus here is that if I'm long on pound, I'm short on dollar, then I should be the same on the euro. Now we had a move down here that made us think that perhaps we're going to be short, and this is why it's important to go out to bigger time frames, because on smaller time frames you have what we call a lot of noise, so it's sometimes hard to see the bigger picture. So when we go out, we see that we had this pivot here. It broke through that. It broke through this resistance. It broke through this top here, and this is a double top here, basically, that it broke through as well. So it broke through this resistance pretty hard, came back, tested the now new support, and then came up here and broke through this resistance as well and hit this resistance. What happened is it came back through support, which we kind of expect. And what we can see here is we would expect price to come down into this area that it broke through. It broke through the resistance, now new support, tested the support, went back up, and then as it comes back up here, we know there's a consolidation area here. There's they're getting rid of the people are selling off here, taking some profits. The price will drop a little bit. New inventory is created by the ones that didn't did not sell out, but the stops are triggered by the short, so new supply is created, and this is a reasonable level. And if you see, you have this top here and this top here, and they are smack identical, this and this, so that would indicate this is a good area for going long. Now I have a breakout on that box, so I'm kind of thinking that I want to go long here, and we have a 50% fib, a retracement down to almost 50%. So I think this could be another good opportunity. So I'm going to take a long position here as well. So I'm buying. I have 2% risk on the pound USD. The pound is also referred to as cable, and that is because there's a cable that goes over to UK. So cable USD, and then Euro USD is usually referred to as fiber. So anyway, that was just a side step there. But I got 2% sitting on this, and I'm going to set 2% on this, which means I have another $5 stop loss. Now, reasonably, you find the low, the previous low, and you put your stop loss there. So let's see what that put us at. So we'll drag a hold of this one, count down to here. We're at 33 pips and $3.33. If price would come down to here and go past 100 on fib, then there's a change in the trend anyway, and then we need to get the heck out of it anyway. So the stop there makes sense. If we put it like here, that will be a 61.80 fib from a bigger move on 1 hour. That's potentially that it can come down here. So it's all about how much you want to risk. I'm $3 in. I can go to $5, which would put me right here if I want to. And if price turns this much, fine. Then the trend is changing temporarily anyway. I think I'm just gonna stick to this. I'm at $3, so I'm a little bit over 1%. So total, I have $5 here and $3 here, so I'm $8 into it. $8 total risk, which is a little bit more than 3%, and I'm okay with that. So now, where do we put the top? We have a lot of resistance and congestions around here. Let's go out on 4 hours and see where could we potentially look for a good profit. We see a lot of wicks in this area here, so we're gonna have a lot of back and forth over here, but let's just put it right here. So about 50 pips, $5, almost a 2-to-1 ratio. We'll tighten it up as it moves up. One thing to notice is the spread. So the spread is what the brokers use to make money, to get paid for facilitating the electronic trading here. So the spread you always have to consider. So if you buy at $1, if you buy and the price sits at $1, you'll actually pay $1, let's say $1.02. That 2 cents is the spread that the broker gets paid for facilitating these this trading setup for you, or the access to the trading. One thing to think about is the broker spread is crazy. I've seen broker spread go up to 150 pip. That means that if you took a trade at the broker hour, you'd be down 150 pips potentially if you take it when the broker spread is turned on. The broker spread is turned on usually between 5 and 6 p.m. Eastern time here in US. So for Europe, that would be 5 p.m. would be equal usually most of the time, 11 o'clock at night to midnight. The broker spread is there. Basically, there's no market open for 1 hour, and then Asian market comes on and stuff like that. But during that time, the broker will facilitate. They will trade off their books, and when they do, then they turn on some crazy spread sometimes, depending on the market and volatility on the market. So you could pay hefty. So my recommendation is never ever take a trade between 5 and 6 p.m. Now I say that, and sometimes I've by mistake forgot to look at the watch, and I took a trade. I haven't been hurt by 150 pip spread, but I have been down 30 pip spread. Now the other thing to think of is also at the broker hour, if the spread on Euro USD here, for instance, we hit 5 p.m. and we're not out of this position, they can increase the spread to 20 pips or 30 pips. And if I have 30 pips from my opening to my stop loss, by setting that broker spread pip at 30, they will trigger my stop loss. And I'll be out of the trade, and I'll be down $3.33. So what you can do at the broker hour is just remove the stop loss, or you can, before the broker spread comes on, just tighten up your stop loss to be 10 pips off of the broker spread. Most likely you'll get your trade triggered, your stop loss triggered, and you're out, and hopefully you're positive by then. I usually don't trade with stop losses because my stomach can handle quite a lot, so they can't trigger my stop losses. But if we're still sitting on this by 5 p.m., I either will close out with a small profit, or I'll remove the stop loss. Right now it's Monday, January 6th, and it's extremely slow market. So I'm gonna stop the video here. It's getting quite long. I'm gonna try to shorten it down when I edit it. But we have two trades, Euro USD and Pound USD, and we're long on both, and we're looking for roughly $5 on each, and we'll see how it goes. These trades are probably going to sit for the rest of the day. Again, I may remove the stop loss at the right before 5 p.m. If I don't see a move, or if I don't get stopped out. So I'll see you tomorrow, Tuesday, January 7th. I do believe we're going to have a little bit more volatility then, and a little bit more fun. Thanks for tuning in, and don't forget, hit the like button down below and hit the subscribe. Thanks. Hey everyone. So I just want to take a second here to come back to dollar Swiss franc. If you go back to my video at around 42 minutes into it, you will see that I talked about how it would potentially come up to an area that I marked with a blue box, and said that at this area I believe it would go short. And at that time there was no price action around that area, and as you can see now, the price did indeed come up exactly to that area, and then dropped, and it dropped about 19 pips, and probably will continue dropping. But it just goes to show how important these support and resistance lines are. We now have that. We had the 61.8 fib, but we could have used the same thing as I was talking about in the video, a support and resistance right at this line where I'm holding right now, where price came up and then went down. And I'm going to put it in here just for a quick second, just to show something that's kind of interesting, and why price action trading is so powerful. And when you use a lot of indicators, you kind of miss the stuff. And support and resistance is extremely important. So train. and it'll help you a lot in the trading. So as you saw, I put this box in here. Go back to my video. You'll see in 42 minutes in, I'm making this blue box and saying the price will probably come up here. And I use this area here as a reference point in this area. And as you look left, the famous look left, and you'll see what's about to happen. The price came up to this area, so, and then failed to break through. So, and it's continuing down. What I now expect is where the price will go is I'll reverse the fib. So this fib is drawn from the top to the bottom to see how much retracement was. Now I'm going to draw from the bottom to the top to see where could price potentially go. And I'm looking at 161.8 fib. I believe that price could come down around here. And that would be consistent with, again, a support and resistance. So I'm going to lay a support and resistance down here just to show we're right here. And we have an area here, here, and then price turned around here. This is a typical stop loss change where you create new inventory by triggering stop losses and then take it the opposite way. So let's see if this plays out tomorrow, Tuesday. And quick update, as we can see here, both trades are now positive. The pound USD is up almost $2, which means we're up almost 20 pips from the trade. And once we break through this top here at 25.1, I will move the stop loss up. In fact, at this point, I will actually move it up. And I will shorten that, so my risk is now, I'll set it right here at 35 pips. So my risk, my outstanding risk now is less than 3%, because I got $3 here and $3 on euro, so that's $6. So I'm below 3% in open risk on all open trades. So again, once it comes over 25 pips here, I'll move to 0. And then I'm in at no risk on this, and then obviously I'm looking for this top to be reached. So we'll see. See you tomorrow, guys. Bye.